You may have noticed the support and resistance doesn't quite work the way it's supposed to, but you want to understand which zones will hold. This is going to teach you exactly how to find perfect zones to put your support and resistances. The main thing you need to learn is to understand that if you just have your candles like this, we need to find who created the zones. And this is why I actually highlight my candles in this way, so I can see what the US traders are doing in the market and which zones they have been respecting, because zones aren't formed by random. It doesn't form because the market likes path. It forms because you have different active participants in the market and they will favor certain areas. Taking this into account, I will then want to trace only the zones created by one specific group of people, in this case my green candles over here highlighted. Whatever it seemed like they're respected, like in here for example, and in here up the top here, I will be marking out as zones. I will mark it out over here, which they brought price to, as well as this area here they brought price from. Other areas as well, such as this one up the top. Once I have all of my zones set, all I need to do is to go on a 5-minute perspective, wait for the same traders to then come back to the market. Who created these zones are the green candles, not the yellow candles. And you can see that the yellow candles, they don't really seem to respect the zones much. They will cross past the zone, they will continue moving around sideways mostly as well within the zone, going up and down, and this is where most people get caught out. And now we'll essentially just wait for price to be on one of our zones, give us some sort of rejection just like this, and we'll then aim to reach the next zone just like that. And as such, we'll just wait for price to do its thing, and then you can see this is a support and resistance that works. But why did this support and resistance work? Because we have a US supply and demand zone, and then we have the US traders back in the market. They have used this zone before, and as such they like it. Other bankers, they don't really care about this zone. You can see that they danced around, they did whatever it is that they wanted to do, but the US bankers specifically, they liked the zone in the past. As such, they are likely to like the zone again. This is how you find high probability trades with supply and demand zone. I can keep going in here and you just look how accurately price keeps respecting the zone. Once we move price from a place to a place, you will notice that volume died down because the movement has already been completed. We wanted to just bring price from this zone down here up into the top here, and once this has been done, we are finished. We need to just wait for the next time price will be active again until we can trade once more. We'll wait for the green candles to come back around, and as soon as the green candles come back around, we will wait and we will see first and foremost, as they are about to come through now, the next couple of candles, that we are within this range up the top. First thing that I have to do is go back to my higher time frame, and I will go to the left just to see which zones we do have up above. And I can see just off an instance that up on that zone I've got this area here that we had marked out, which lines up perfectly already, look at this, with the green US zones in here as well, meaning that this is a very likely zone. Now this is a very big gap, we just want to make sure that we account for everything. As such, we'll just see if there is anything down the middle. So I'm keep going back just to see if there is any other zones in the middle here that might be important for us to know. In this case, it doesn't seem to be any. In this case here, so what we can do is just do something like this, so we can take note of that. And as we go to our 5 minutes time frame, we now have 2 potential zones in there, so we need to wait to see if price is going to go from here or from here. If it keeps going above as the green candles come around, then we'll have to just see how we go from there. Now green candles are back in here, back active. They go straight into our zone. Now they haven't really given any sort of reaction just yet, so the movement hasn't started. But as soon as we see some sort of reaction, whether it's a really aggressive move to the downside or an aggressive move to the upside, then we will enter. Now I'll go back to my 5 minutes and I'll just wait for some sort of reaction either way. So now I can see that price is starting to rejecting the zone. So unless we go further down, it does seem that the intention here is for us to go up. So we can do something like this, targeting the zone above. We'll just put our stops adequately below what the zone is, and then we'll be targeting once again that zone up the top in there. Now we'll just wait to see what the trade will do. We start going well, we start getting very close to the bottom but not quite stopped out. He went right into our zone, as you can see, and then gave another massive push to the upside, which is really good sign that we are starting to reject. Now this candle here just shows a lot of nice momentum further above, so confirming that we are in a good spot to continue trading up. And as such, we just wait for price to keep doing its thing. It comes back here comes back to then retest the zone once more, and we'll just wait until price does its thing, it reaches right on that zone, and then it starts to reverse again. This is how you can get back-to-back trades. You can't just trade any zone at any time. You need to understand who created these zones and when they are back to trade it. And if you backtest this, then your win rate will start to improve dramatically just by taking this into account. Once again, you can see that once the movement has been completed, once we have been from a zone to a zone, volume then just dies down, the movement has been done, and the rest of the session is just consolidation. You just need to find that one movement that they are looking to do and just stick to it, be happy with your day. But with the first trade, you would have done 3.5 times your risk, close to, and with this other trade, you've done 2.5 times your risk. So altogether, you'll be just under 6 times whatever you've risked in here. Hope this really helps you to get a good understanding of supply and demand zones and how to actually use them properly. This is what got me funded. US session has retired me, and I'm sure they can retire you as well. So keep focusing, keep practicing, and I'll see you guys next time.